This is Robert Kraft, and I'm your host for SNN Network. And joining me right now is Dwayne Kushniruk. He is the CEO of OneSoft Solutions. It's a publicly traded company. I got two symbols for you: OSS on the TSX Venture and OSS.IF on the OTCQB. Dwayne, thank you for joining me today. And how you guys holding up?
Oh, we're holding up well. Thanks for having us, Robert.
It's a pleasure as always. So before, we've had you guys on many times now, and we'll be getting into an update as there's been, a good amount of news coming from OneSoft. But first, let's get a very quick overview and history of the company, and then we'll go from there.
Well, OneSoft has developed a revolutionary new application, a software as a service application. We use machine learning and data science to help oil and gas pipeline operators reduce pipeline failures to zero. That's the objective of the industry, and we have a solution that can help them do that.
Fantastic. All right. So we last had OneSoft on the program in December 2019. I know that feels like a decade ago, but here we are. And it was only 5.5 months. But the company just reported its Q1 2020 results on May 19th. So how did the company perform during this time period?
Well, we had a great Q1. With respect to fiscal 2019, we doubled recurring revenue over the prior year. And we're expecting, again, our objective is to at least double annual recurring revenue in 2020 over 2019. Our Q1 was great. We had about $1 million swing quarter over quarter when we compare to Q1 of 2019. Our revenue, EBITDA, was all up by nearly $1 million this quarter. We made a little bit of money in the quarter, which is a bit unusual for the stage we're at in the company, because we're still very much in an R&D mode and still reinvesting in product development and enhancing our software and so on. But we had a great quarter, and we're expecting to reach our objectives. Obviously, COVID and the decline in oil price has been a concern for many people. And what we found, Robert, we attended the large PPIM, which is the industry's largest annual trade show held in Houston in February every year. And this draws a global audience of integrity engineers. And we had great momentum going in and coming out of that conference in mid-February. But the last week in February was the last time we were actually able to meet with clients person to person. And then everything shut down. So what we found in March, we saw two different scenarios. Our clients who had adopted our solution, being cloud-based, we found they were able to really move to home-based employees with very little disruption, because they have, the engineers have access to all the data they need to continue to operate their pipelines. So it wasn't an issue. We also noticed that our prospective clients who we were talking to, the month of March, it was pretty much a scramble for them and most businesses to figure out how to continue to operate your business with home-based employees. Now, having said that, we noticed about the middle of April, things seemed to turn around. Most companies had by now figured out how to use online tools and got restructured to do that. So since for the last month or so, we've been busier than normal. It seems like everybody's playing catch up.
I was just going to say, I mean, I wanted to break some of this down because you actually hit on one of my questions that I had to ask, because I'm sure you get this nonstop from every investor call. I think you actually got this question when you presented at our virtual
Right.
is about, I mean, literally it was like the movie Perfect Storm potentially for you guys, you had the global pandemic on this side, and then you had steep drop in oil prices, and as an, you know, oil companies, ONG companies being kind of your main vertical right now, that I'm sure people were nervous, but how did you guys kind of weather that storm and kind of come out the other side?
Well, as you can see by looking at our stock price over the last few months, it declined. And I think that's because we were lumped with the oil and gas industry, as were our clients, who are midstream clients. We believe that this price decline really affected the upstream and downstream segments of oil and gas industry, much harder than the midstream. The midstream sector transports the product. So their business really doesn't have a lot to do with the price of the product. Oil needs to keep flowing, gas needs to keep flowing. Most of our clients have long-term contracts, so their revenues are assured. But we saw across the board market caps decline significantly because everybody was lumped together. So, that hasn't been pleasant for anybody, but in reality, it was perception, not reality.
Got it. And so I want to dig in also a little deeper into this last 5.5 month performance. You mentioned that you have your expectations even also moving forward. What were some of the reasons that you still saw the performance you did, despite some of these, global catastrophes happening?
Well, the fact is that the pipeline infrastructure is old and aging, and it needs to be maintained regardless. PHMSA, who's a regulatory body for hazardous pipelines in the United States, announced this mega rule, which takes effect on July 1st of this year. And they have announced relaxation of certain components of these new requirements to December 31 of this year because of COVID and the interruption to the economies. However, this is still a long-term objective that has to be met. The bottom line is these companies have to continue to maintain their infrastructure. And, I think that COVID and everything that has happened is actually going to help drive our business post-COVID. We have now started to do the analysis on the cost savings to quantify the value of using our solution versus the legacy processes in place, and the difference is significant. We can save companies a lot of money. During recessions is when technology tends to take a leap, because companies have to find more efficient ways of doing things and so on. So that's that's a perfect storm for us in terms of opportunity. Is interesting. Microsoft, who we work with very closely, in their last address to their shareholders at the end of April, stated that they saw 2 years of digital transformation take place in 2 months. So you think about that number, and that's what's happening, and we're riding that wave. And it's not like we're learning it. We've been playing it and investing in it and building on it since 2015.
So another question I have, and because you mentioned that, a lot of the revenues that came in this first quarter, it's from recurring, legacy clients that already have, your software and your capabilities already embedded into their processes. So I have to ask about onboarding potential new clients. What's involved in that, and has COVID affected that process at all?
It slowed down some processes, but I think that what is done, it's going to pile them up at the end of the pipe, if you like. And we don't have concerns that we're going to lose this business. Things are taking a little longer to get done, and so on. So we'll probably see this stuff pile up towards the end of the year is my guess. In the meantime, we also announced in February the establishment of our innovation lab. And, we're very, very busy with that, with business development projects where we're talking with a number of industry vendors, industry experts, some of our clients, some of our prospective clients, to actually develop new functionality that's going to be bolted onto our platform. So this kind of gives us a little bit of a breather to get a jump start on that.
Perfect. All right. So Dwayne, from what you can tell us, what would you say are some of the company's goals and your outlook for the rest of 2020?
Well, we believe that to deliver value to our shareholders, we have to really focus on growing recurring revenue. That's what investors like to see. If you look at our quarterly growth historically for the last 3 or 4 years, that's been lumpy, but the trend line is certainly where we want it to go. And what we want to do is increase that growth and dampen out the highs and lows. We want to flatten that curve, if you like.
Oh, more curve flattening. Okay, I like it. So with that, where can my audience go and find more information about OneSoft?
We're posting this information on our website. That's OneSoft, ONESOFT.ca. I should mention that we also just had our AGM yesterday, and there will be a video posted up in the next day or two, our first quarter report and our report for last year. That'll be posted a video on the website within a day or two. So I would ask people to go there, people who have interest.
Perfect. Well, with that, thank you so much, Dwayne. I really appreciate you taking the time today. Stay safe, good luck, and I look forward to our next update.
You bet. Thanks, Robert.
Thank you.
Bye-bye.